Thank you so much, Mr. Speaker. Members, if you weren't excited about taxation, you'll be excited now. This is one of the best policies around the country that more than half of the great states in this nation have already implemented, and it is called combined reporting. Might be wondering, what is that, Representative Eskamani? It sounds really confusing. It's actually quite simple. I'll give you an example. Let's just say I start a business called Eskamani, and we make water bottles, and they're super popular. So everyone's buying them, right? Okay, so let's just say that I made $1 million in state income selling water bottles. However, I started an LLC in Delaware called Anna Inc. that owns the royalties to my logo. So that's a subsidiary that I have. I can write that off, my state income, as an expense, even though I just wrote it off to my LLC in Delaware. Some of your best and favorite companies do this in Florida every single year. And it technically is not illegal, right? DOR tries to catch folks and find evidence of it and so forth, but Florida is called a separate reporting state, so they're allowed to do it. And so in conservative and democratic states, they have closed this loophole because I think we all agree that we should pay what we owe, right? And this unfortunately allows multi-state corporations to hide their income in ways that small, single-state businesses cannot. And so this would put Florida on the map with combined reporting. And that is the amendment, Mr. Speaker.
Members, questions on the amendment? Representative Nixon, you're recognized.
Thank you, Mr. Speaker. Rep. Eskamani, how much money are we losing if we fail to implement your amendment?
Representative Eskamani.
That's a great question, Representative Nixon. So the Florida Tax Handbook, maybe back in 2016, 2017, actually stopped reporting this number, which was very curious to me, because we used to report it. And it would range, but typically people have estimated to be at least $1 billion of lost revenue. And this is what we call silent spending. It's basically when we're not putting in the line item, $1 billion tax breaks, but it's money that we never see, so we never can budget for it. So it's almost as if we're giving it away for no legitimate reason beyond this loophole being in our tax structure. So it ranges, and of course it will fluctuate with the state of our economy. But to give some perspective, Florida is a very regressive state. We gain most of our revenue through sales tax, and you can kind of imagine as a 30-story building compared to maybe a 4 to 5-story building. So $30-some billion in sales tax from consumers, which, by the way, only about 15% of that is tourists. It's actually less now, so most is us paying it as residents. And then $4 to $5 billion in CIT revenue.
Additional questions? Additional questions of the sponsor? Seeing none, are there amendments to the amendment?
None of the desk, Mr. Speaker.
Substitute amendments?
None of the desk, Mr.
Is there
Speaker.
debate? Debate on the amendment. Representative McClain, you're recognized.
Thank you, Mr. Speaker. While Representative Eskamani and I have had lots of conversations about this, she didn't file a bill this year, therefore we haven't had a chance to fully vet this item, and it would be a major change to our corporate income tax. Members, I would ask that you vote no on this amendment.
Representative Nixon in debate.
Thank you, Mr. Speaker. Thank you, Thank you, Rep. Eskamani, for bringing forth this great amendment. It would be amazing if we could pass it. $1 billion, even $25 million could do so much more for the state of Florida. It could help with the housing crisis. It could help with some schools, public traditional schools, and so much more. I am concerned that I'm really concerned about that sales tax holiday being cut down. And so, it can help with that. And so I would urge my colleagues to vote up if they care about working families. Thank you, Rep. Eskamani.
Additional debate. Are you going to debate your own bill, or are you waiting to close? Additional debate. No additional debate. Representative Eskamani, you are recognized to close on your combined reporting bill for the 4th year in a row.
Thank you so much. I wish it was the bill numbers. And to Chair McClain's point, I did not file a bill this year because unfortunately I didn't get a hearing last year and I couldn't bring it to the floor to do this. I really wanted a chance to talk about it because I think it's one of those things that people don't understand until you hear it and you kind of like glossing over, you get bored. But It really is such a transformational tax policy that has been fought by Republicans in the past. It's not a partisan issue. And I have made requests for us to consider a workshop. So maybe we can consider that next session, because $1 billion could do so much in our state. We could reduce sales tax for every Floridian if we did this. And in fact, that's what Rhode Island did. Rhode Island passed combined reporting, and they actually reduced the corporate income tax rate for all businesses because the revenue they were collecting from closing loophole was enough to reduce the tax for everyone. So we can also have a net neutral with a policy like this. But I want y'all to really think about just, how wrong it is that some of the largest corporations get away with this, and how working people and smaller businesses can't and don't and wouldn't, because ethically they shouldn't. But unfortunately, some of our most popular brands do this every single day in our state. So I encourage folks to say yes, Eskamani on this. Let's be bold. Let's ensure that everyone's paying what they owe, and let's support combined reporting. Thank you, Mr. Speaker.